Hey there, investorholics. Welcome to another ETF Spotlight review. Today we'll be taking a look at AGVT, which is the BetaShares Australia Government Bond ETF. It's a continuation of my little series on bonds. So if you're looking for some portfolio diversification with regular monthly income, pretty high quality sort of government bonds in this one as well. It might be something to hang around and have a little bit more of a listen to. So, the main aim of this one is to reduce your associated risks with investments in other asset classes. So if you own a lot of, equities, and owning some bonds might not be a bad idea. So stick around, guys. I think it might be entertaining. Hey there, investorholics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so jump on into the investment objective here. So AGVT aims to track the performance of the index and provide exposure to a portfolio of high quality bonds issued in Australia, federal and state governments. So the fund strategy is to invest primarily in a portfolio of relatively long duration Australian government bonds. Eligible bonds must be in Australian dollars, fixed rate bonds, and have a term to maturity of between 7 and 12 years. So we're looking at sort of a long dated fund here. So 75% of the total portfolio weight is allocated to bonds issued by Australian federal government and states. And then you got 25% of the portfolio is issued allocated to bonds from supranational organisations, Australian Environment Government agencies, and other similar issuers. So as always, we need to have a think about why we would bother doing this one. As always, we're looking for a quality investment. So this one has superior credit quality. So Australian government bonds have a high credit rating in the bond market. Diversification and a little bit of sort of defensive play as well. So government bonds historically have tended to rise in periods of significant equity market weakness. So sort of that counter-cyclical type thing. So when one goes up, the other one goes down. Regular income. So this one's nice. You get a dividend or a distribution every month. So AGVT focuses on long duration bonds, and that means income potential is typically higher than other Australian government bonds that don't have this focus. Okay, so let's have a look at some of the more critical information here. So we had a net asset value of $44.21 and trading above that at $44.25. We had a market cap of roughly $308 million. Management fee is pretty good, 0.22%. As we mentioned before, you get a dividend or a distribution monthly. Dividend yields about 1.66%. So as you probably know, bond ETFs can be bought and sold just like any other shares on the stock market. So bond ETFs typically have lower fees than bond mutual funds. So might be sort of a cheaper way to get in. Also, you can get in using smaller amounts. So sort of from $500 upwards when you trade on one of the bigger platforms. Bonds are useful for investors seeking to preserve the value of their initial investment, as they typically have a lower risk and volatility than stocks. So yeah, most people try to use bonds as sort of smooth out income income matching, I suppose, income and expense matching, I should say, and also try to protect their capital, so their starting capital, so they don't want the value to go down, obviously, of your investment. So that's one thing that people are looking at here. So as always, we like to do some extra research. So have a look at GOVT and IAF, and also check out the card. I'll put a link in there for one of those as well. So all pretty boring type stuff. You know, all the top 10 investments here are 8 of them are just one of the bog standard Australian government bonds, which if you really wanted to, you can go on to the Australian government website and actually buy those directly from the Australian government. But obviously, when you're buying the ETF, you've got a package of bonds, and it kind of spreads your risk a bit too. So we've got looking here, International Bank for Reconstruction and Development. So they've got one of those bonds, and also European Investment Bank. So you know, there's, like I say, it's mainly focused on longer duration bonds. So yeah, I mean, that helps to smooth out any volatility, or you know, reduces the amount of volatility in the monthly payments anyway. And you're going to get a bit of fluctuation in the share price just from the noise that's going on in the rest of the stock market. So as I kind of touched on before, individuals can use bonds for long-term planning, capital preservation, saving, and sort of trying to maximize your income, managing interest rate risk, and diversifying your portfolio. So they're sort of the main sort of reasons people use them. I've done a little bit of a short sort of video series on those ones, and breaking them down a bit more, and a bit more information on how to use those things as well. So I'll leave the card up there in the corner of the screen as well. So bonds provide a predictable stream of income and you know, full par value if held to maturity. I mean, that's one of the things with an ETF. Depends on when you buy in, there's going to be a bit of gyration. But if you're buying the bond itself and you hold it to maturity, you're going to get your capital back. But that's the nuance with ETFs. You might actually have a bit of an issue with your capital stability, I should say. So, you know, I suppose the question is, could your dull portfolio use a kick in the ass from one of these type of investments? So, you know, really, it depends on what your goals are, and whether this type of investment will fit in. So, I mean, you look at the performance over 5 years, it's not, you know, I mean, from the index, I should say, it's not massive, but since inception, you're looking at a little bit of a loss. So, I mean, when you're in these products, you're not really looking at major capital appreciation, you're looking for capital preservation and the income. So, yeah, so it's not like an equity investment where you're looking for capital appreciation and maybe some income. It's the reverse. So, look, you know, this potentially is something of interest. I like it because it is the longer duration bonds, and hopefully there's a bit less, or there's more stability in the pricing because it's sort of a longer dated product. But yeah, there possibly could be other better things in the market. So this one for me would be, you know, if I had to say buy, hold, or sell, I'd say this is probably a hold for me. I wouldn't be rushing into it straight away. Like I say, do your research, but yeah, this is sort of a hold for me. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky Value Investing will be giving you up-to-date investing news and content, so you can navigate the markets wherever you are. Expand your financial horizon. and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.